Hi everyone, this is Sunny Sublok from Matrix Law, and today I'm going to be talking about what are the best options that are available to you if you want to convert an existing LLP into a private limited company. Well, there could be several reasons why you need to firstly seek that conversion. Maybe you need to expand your business, you need to rope in more investors, or you probably reached a point in your organization where you need to take the next initiative and move into a more professional and a more proper setup in the way of a private limited company. So today I'll try and explain to you what are the best options that are available to you and what are the consequences if you adopt those options. So this will be described in the form of advantages and disadvantages. And after you go through this video, I think you will be in a better position to understand which is a more feasible option to you. In the meantime, if you have not subscribed to my channel, I request you to go ahead and do so. And don't forget to press the bell icon so that you get a notification as and when I upload a new video on my YouTube channel. If you have any comment on the video that I have shared, then you're free to obviously comment on it in the video description below, and I'll be more than happy to answer any query that you have. So the first option that is available to you, and this is a very common option which is used by a lot of entrepreneurs when they are converting an LLP into a private limited company, is to seek a conversion under the provisions of Section 366 of the Companies Act. Earlier, this provision was not there, but pursuant to 2016, there has been a notification that has been passed by the Ministry of Corporate Affairs, which allows an existing LLP to convert into a private limited company. And this has been a very common mode which has been used by a lot of entrepreneurs to convert their existing LLP into a private limited company. So how do you start the process? Well, it's quite simple. You first need to file a run form, which is the name reservation form with the ROC, just to see if firstly that name is available or not. And the good part is that you can obviously seek the same name that your existing LLP has, and the same name will be granted to you subject to that being available with the ROC. After that, you have a time period of approximately 25 or 30 days where you need to file some documents with regard to the LLP, which is a copy of the LLP agreement, details of all the partners of the existing LLP, all the financial statements, and the other details in terms of your DIN, DSC, etc. So there is more paperwork that is involved in this process, but the process is quite streamlined and it is quite seamless, where after submitting all of these documents, you proceed through a normal incorporation of a company. But the only difference is that you're converting an existing LLP into a private limited company. So before you seek this conversion, there is one important criteria that has to be met. There have to be 7 existing partners in an LLP before you seek this conversion from an LLP into a private limited company. I also believe that that number has been reduced by the MCA from 7 to 2, but as far as I know, this has not yet been brought into force, which means that amendment has not been carried out under the Companies Act. So you need a minimum of 7 existing partners in an LLP for you to qualify for this automatic conversion from a LLP into a private limited company. So what is the advantage that is available to you if you choose to go with this option? The main advantage is that you get a complete capital gain exemption if you choose to transfer your LLP into a private limited company under the provisions of Section 366 of the Companies Act. And this has been held by a lot of high courts from different states, where it has been established very clearly that when an LLP is actually converting into a private limited company, then there is no dissolution that is happening and it is an automatic conversion, and obviously therefore there would not be any capital gains that would arise on the transferor when he transfers the assets of the partnership firm into the private limited company. So this advantage could be huge for, let's say, a partnership firm or for a startup which is in operations or in business for, let's say 5 or 6 years, and there are a lot of assets on its book. And because of that transfer, that potential transfer, there could be a lot of capital gains that might arise. So if you are falling in that scenario, then obviously I think it is a very important decision to be taken into consideration if that entire capital gains can be exempted or not. If the amount is huge, then obviously there are a lot of savings at your end. So what are the disadvantages if you choose to go with this option of an automatic conversion? Firstly, from my experience, I've seen that this process takes longer because there are further documents to be reviewed by the Ministry of Corporate Affairs because you're actually converting an LLP into a private limited company. So they would need to examine the past documents of the LLP and things like that. So it is a more time-consuming process. Roughly, I've seen it take anywhere between 45 and 60 days. Obviously, sometimes it has been faster, but that is the usual time process that it takes. The second disadvantage is that there are a lot of more additional documents that you have to file because you're again converting an existing LLP into a private limited company. So there's more paperwork that is involved in this entire process, which is not a huge problem, but it still is a small challenge nevertheless. And the third biggest disadvantage is that there is a condition if you choose to go with this option that once the partners who are the erstwhile partners in the LLP convert themselves into a shareholder in a private limited company, then they need to maintain 50% of their shareholding as long as, for a long period of time in the LLP. Now, this is something which is not very feasible and not very advisable as far as a lot of new shareholders are concerned, because some shareholders might want to take an exit after the conversion, or they might not even want to continue to remain as a shareholder in that company. So this is one important provision that you have to adhere to in case if you go down this option. So you have to maintain that shareholding, and basically you're stuck into the new private limited company as a shareholder for a certain time period. So this might not be a workable situation for a lot of entrepreneurs or founders, especially when they have other business decisions or other plans that they need to take care of. So the second option that is available to you for converting an existing LLP into a private limited company is to firstly incorporate a new company and then transfer the existing business of the LLP into the newly incorporated private limited company. So let me explain to you how this process works. Step number one, you incorporate a new private limited company altogether. Step number two, you enter into a written agreement between the LLP and the newly formed private limited company, whereby either a slump sale or a business transfer or even an asset purchase, the entire business of the LLP is transferred to the newly incorporated private limited company. So let us take an example of an asset purchase agreement, which is what I've been advising a lot of clients to use if there are only movable assets which need to be transferred from one business to another. So it could be in the form of an asset purchase agreement where the newly incorporated company is purchasing these assets from the LLP. It is a more straightforward process. What are the advantages in this is that there is a faster transfer of this entire asset or a business from the existing LLP into the private limited company, and this just makes life easier for everybody concerned. So what are the advantages if you choose to go with this option? Number one, you save a lot of time in terms of incorporating this company. So when you incorporate a new company, it usually takes around anywhere between 20 and 30 working days. So you save a lot of time because you're freshly incorporating a new company. The second huge advantage is that you don't have any additional documents that you need to file, as in the case of when you're converting an existing LLP into a private limited company. So there's less paperwork that is involved. And the third most important factor that is involved, or a major advantage, is that once you are transferring one business of an LLP into a newly incorporated private limited company, and if you go with an asset purchase agreement, you can structure that agreement in such a way that you're only purchasing the assets but not taking over the liabilities of that existing LLP. So this could be a huge important consideration for a lot of entrepreneurs or founders out there, because what you can do is you can take the assets and leave the liabilities with the LLP itself, which does not happen in a situation when you're automatically converting an LLP into a private limited company, this is the first option that I'm speaking of, because in that case, in that automatic conversion, the entire assets and liabilities are carried forward from the LLP into the private limited company. So this could be a very important consideration for a lot of founders and entrepreneurs. So these are the three major advantages that you have if you choose to go with this option. So what are the major disadvantages if you choose to go with this option? The biggest disadvantage is that in this case, there would be capital gains that would be levied on the transferor, because this is actually a transfer of one business into another entity. So there is a transfer that is happening which qualifies as a transfer under the Income Tax Act, and therefore capital gains would be applicable on the transferor. But this again depends upon what would be the value of the assets that are being transferred and what is the capital gain that would be calculated on those gains. So if those gains are huge, then it might not make sense to go down with this option. But if those gains are not a lot, and let's say if it's a newly formed company, or it is a company which is not very old, or it does not have a lot of assets on its book, then it makes sense to even pay a small amount of capital gains if you have to, in order to go with this option. The second most disadvantageous scenario in this case is that there is a stamp duty implication, and because you would be entering into an asset purchase agreement, because of which a business is being transferred from one entity to another entity. And if it's let's say a sale of a movable asset, which could be in the form of, let's say, furniture or some IT products that need to be transferred from one company to another. Let's assume that if that is the case, then there would be a sale of a movable asset, in which case stamp duty would be applicable on that transfer. Now, depending upon which state we are speaking of, because stamp duty differs from a state to state. In some states, this number is not very high, but in certain states, that figure could be high. So you again have to take that into consideration before you decide which is a more feasible option for you. So which option you should choose as and when you want to convert an existing LLP into a private limited company? I would suggest that if you are an LLP which is not very old, it does not have a lot of assets on its book, and if time is in essence for you, and you also want to wrap this up or close this process earlier than expected, then I would suggest that option number 2 is a more feasible option to go for you. But again, this depends on a case-to-case basis. If you feel that the capital gains that you need to pay on this transfer is not making any business sense from that perspective, then maybe you can go with the automatic conversion. So, well, the need and the complete decision is yours in terms of what is it that you need to do and what is it that you don't need to do. But I think you should probably get in touch with a chartered accountant and take everything into consideration. Take even advice on what is the stamp duty implication if you go with the second option. What would be the eventual cost that you have to bear in terms of converting your LLP into a private limited company. So take all of these considerations on board before you decide what you need to do. And I think once you have a proper assessment in front of you in terms of what do you think should be done and what are the pros and cons of both the scenarios, it'll make the decision all the more easier for you. So, I mean, do take everything into consideration before you decide what you need to do for yourself. If you have any questions on the video that I've posted or any query that you have with regard to what I've discussed in this video, then obviously feel free to comment on the video below and I'll be happy to answer your queries as and when I see it next. Also, if you want to speak to me directly, you can schedule an appointment. The link is given in the video description below. It's a completely automated process. It's taking you to a separate page. You can choose a date and time and obviously schedule an appointment. And again, I'll be more than happy to speak to you and guide you about what you need to be doing going forward. If you still have not subscribed to my channel, I would suggest that you do so because I'll be coming up with a lot of meaningful videos going forward. And don't forget to obviously select the bell icon again so that you're intimated again in terms of as and when I upload a new video on my YouTube channel. Thanks a lot for watching this and keep safe again during these difficult times. And I'll speak to you guys very soon indeed. Bye-bye. Take care.